Hello and welcome to the quarterly result analysis for Bajaj Finance. We will be looking at the results for Q4 FY19. Let us start with the P&L numbers for revenue and expenses. The graph on the left hand side shows the details on revenue and expenses. In Q4 FY19, the revenue grew at about 52% to Rs 5,307 crores. The expense grew at a relatively low rate of about 49%. The graph on the right hand side shows the historical growth in revenue numbers over the past 6 quarters. Q4 FY19 has turned out to be the best quarter as far as revenue growth is concerned. Even with such a large base, the company manages to grow at an impressive rate. It is a clear indication that the opportunity size is quite large and the company is able to tap into the opportunity. These revenue growth numbers are also an indication of the limited competition that the company faces in its target market segments and geographies. Let us now move on to the profits and EPS numbers. The graph on the left hand side shows the profit growth in Q4 FY19. The profit grew at a staggering rate of about 57% to Rs 1,176 crores. The graph in the middle shows the growth in EPS for Q4. The graph shows the non-annualized EPS for Q4 as well as the annualized EPS growth for the entire financial year. As expected, the EPS growth mimics the profit growth and came in at 56% for both the annualized as well as non-annualized EPS. I was curious to find the growth in profits over the past few quarters, hence I collated the numbers, and the graph on the right hand side shows the growth in profits over the past 6 quarters. Extremely good set of numbers which show the internal efficiencies of the company. With respect to the expenses incurred by the company, as expected, finance costs is the major expense for the company. Since Bajaj Finance is in the business of lending money, it has to borrow from different sources and it needs to pay interest on the borrowed sum. The graph on the left hand side shows the finance costs, which grew at the rate of about 55.8%. The graph on the right hand side shows the growth in the rest of the expenses. Employee expenses grew at 36.3% and was acceptable compared to the revenue growth. Other expenses growth was modest at 28.3%. The provisioning numbers were the ones that came in as a surprise. An 80% growth in provisioning was not expected. Let us look at the NPA numbers. The graph on the left hand side shows the gross NPA was higher than the normal at 1.54%. The net NPA was 0.63%. The graph on the right hand side shows the historical value for the net NPA. We look at the numbers for Q4 and Q3 to get a sequential view of NPAs. We also look at the net NPA for the past 6 years to get a historical view. Both Q4 and Q3 FY19 stand out as the bad quarters for the company. Let us now look at the company footprint with respect to its own branches, as well as the company's presence in third-party stores. The graph on the left shows the branches in rural and urban areas from FY15 all the way till Q4 FY19. In FY15, the company had 161 branches in urban areas and 232 branches in rural areas. By Q4 of FY19, the number of branches in both the centers are more or less equal at 927 versus 903 respectively. The graph on the right hand side shows the growth in Bajaj Finance presence in third-party stores, for example in stores like Roma, etc. The graph shows the numbers for rural as well as urban presence. With every quarter, the company is spreading itself to many third-party stores. Both these graphs are the reason why the company is able to show the huge growth in AUM, disbursements and revenue growth that we have seen over the past many quarters. Moving on to assets under management, the graph on the left shows the AUM numbers for Q4 FY19 as well as for the past 5 financial years. The company has seen a rapid growth in AUM. As of Q4 FY19, the assets under management are 1.15 lakh crore rupees. The graph on the right hand side shows the AUM growth in percentage terms. As we can see, the company has had an impressive growth over the past 5 years. A higher AUM potentially results in higher disbursements, which leads to higher revenue, and when the NIM is higher, this eventually gets transferred to higher profits. So AUM growth is crucial for the company and it does not disappoint the shareholders. The margins depend on the average cost of borrowing. The graph on the left hand side shows the average cost of borrowing for the company. Over the past years, the cost of borrowing has come down from 9.9% in FY15 to about 8.3% in Q4 of FY19. When we look at the way the benchmark rates have dropped over the years, these numbers seem to be in line with the overall decrease in cost of funds in financial sector. However, the credible aspect is the fact that the company managed to maintain the cost of funds in spite of the NBFC crisis. Going by the size of loan book, the company needs to borrow substantially. Even with this heavy credit requirement, the company is able to sustain the low cost of funds. This clearly shows the confidence of various lending agencies towards Bajaj Finance. One of the critical components of borrowing is deposits. Generally, deposits are one of the most attractive options to reduce the cost of funds. The graph on the left hand side shows the company managed to grow its deposit base every single year over the past 5 years. Currently, deposits make about 15% of the borrowing basket. Return on equity was 22.5%, which is very impressive. With the average cost of funds in India hovering around 15%, the return on equity is way higher for the company. Compared to its peers, the return on equity for Bajaj Finance seems to be one of the best in the listed universe. Same is the case with return on assets. The graph on the right hand side shows the ROA values. At 4.2%, the ROA is again one of the best in the listed space. Bajaj Finance is an NBFC and hence they cannot issue credit cards. Hence it co-brands the credit card business with RBL Bank and earns commission for marketing the credit cards. As of Q4 FY19, the joint ownership has managed to sell more than 1 million credit cards. The company also has a partnership with MobiKwik for the digital wallet business. Bajaj Finance uses the digital wallet to link its EMI cards so that customers can directly link and use the EMI card using the wallet. Bajaj Finance has bought a significant minority stake in MobiKwik and the customers base seems to be flourishing at a very healthy pace. Let us now turn our attention towards the housing finance subsidiary. In FY18, the company started the housing finance business as a separate subsidiary. As of FY19, the housing finance assets under management has increased to about 17,000 crores, which is about 500% growth over FY18. Note that these AUM numbers exclude the existing housing finance accounts, which amount to about another 17,000 crores that are under the parent company. The graph on the right hand side shows the profit earned by the subsidiary. Over the past 1 year, the profits have grown by 500% to 110 crores. The company wishes to be one among the top 3 housing finance lenders over the next few years. With this growth rate, the company is on its path to become one among the top 3. Let's summarize. So in summary, revenue and PAT growth was excellent. AUM growth again was excellent. NPAs have been contained after the IL&FS account that has been provided for. ROE and ROA are much better than the industry average. Great set of numbers from the housing finance arm as well. Overall, an amazing quarter and an equally amazing year for the company. This was an abridged version of the results for the company. Please read through the detailed review on investing.amitkirti.com where we look at some more interesting aspects of the results. Thanks for listening.